Good morning, everybody. Merry Christmas. Good morning, Stel. Good morning, Kay.
Good morning, everybody. Have a Merry Christmas week.
Hello, hello, hello. Good morning.
Everyone all right?
Just about, yeah. We've
Just
already
about,
already started drinking. I don't think that's a bad thing.
I get you. Funny you mentioned that. I had a few gins last night as well, just to get in the spirit of things.
That was a good final, though, right? That was a very exciting final.
Oh yeah, definitely.
Yeah.
You know, I got a bit bored with it about 60 minutes in. I thought, oh, Argentina have got it. You know, they're going to nail this, and wow, fireworks.
Yeah, and I think Messi deserved to have one of those under his belt, being in my opinion, the greatest ever, but most people one of the greatest. So I think it's deserved.
But can you imagine you've waited all that time for a World Cup and you had to wear that outfit to pick up the trophy?
That was funny.
Let's give her your lasting photo. Amazing stuff. Amazing stuff. Right. Well, as me and Kay were off Friday afternoon, we got no headlines to go through because neither of us know exactly anything that went on. So it's going to be a quick show this morning. I just, of course, we've got the details for you. So that's what we'll start off with, and we'll start off with in China and Japan. Firms are shutting some of their operations in China due to this wave of COVID coming across. Similar noise is happening from other firms as well, just as we've been talking about this COVID wave sweeping across China now, apparently. So that is going to filter through into activity and the data, no doubt, over the weeks ahead. Sticking with Japan, and funny enough, it's Bank of Japan tonight / tomorrow morning, and there's yet more rumours about changes coming to the framework or ideals of the Bank of Japan, if you like. Overnight, Kyodo reported that they may revise their statement with the central bank to water down the price target, i.e. be a bit more flexible on the inflation timeline. At the moment, it's as soon as possible to get inflation back to target, but they may add some flexibility in that. There's been a lot of sources pieces out. Well, I say sources pieces. Reuters were out with their sources piece saying that the Bank of Japan might change it, but it looks like they were just rehashing what we got from Kyodo. So they're basically saying that the Bank of Japan, there was also a former deputy governor, Yamaguchi, coming out and saying that they must make their policy framework more flexible and stand ready to raise long-term interest rate target next year if the economy can withstand overseas risk. As always, we take those former members of anything with a pinch of salt because it's easy to make calls when you're not in a hot seat anymore. But after all this noise about the Bank of Japan maybe changing their framework, and this isn't suggested to happen until April, May next year, or when they switch over from Kuroda to the new man. But as we were saying last week, this is becoming a no smoke without fire situation in terms of what may happen at the Bank of Japan early in 2023. Now, to knock that on the head, Japanese Chief Cabinet Secretary Matsuno came out and said there's no plans to revise the joint accord with the Bank of Japan. But as I said, no smoke without fire on this one, and the noise is growing around this one. But what do the economists say about it all? Well, nearly half of them say that the Bank of Japan may unwind their ultra easy policy in 2023. Notice how that's been framed. Nearly half of economists. If in real terms, that's less than half of economists think that's going to happen. But that's how the headlines like to be spun in these days, make it sound like it's more than it is. So not even half expect them to change, but maybe the fact that there's nearly half might be a bit of a change in itself. Kay, what do you make of all this noise this morning around?
Yeah, it all started with a rehash of articles that had been out like weeks ago, right? And then I think a lot of it is phishing, seeing if the officials are going to say something. And well, now it appears that some government sources are going in to that side, leaning to that side, that to do a review. It's planned. The review was planned right after the end of the Kuroda's tenure. The policy review is planned, but now, of course, with inflation higher and with the rest of the central banks really taking yields up, well, their rates higher, yeah, the market is wildly speculating. My base case for tomorrow is still nothing, but we can't rule out discussions around certain things, right? Kuroda has been vocal about no changes until he leaves. Other members of the current governing council are leaning the same way, no changes, but they might and will likely talk about stuff, right? And so yeah, it's a bit of a flip the coin for tomorrow. But what's going to happen with the policy review is really 3-4 months out. Of course, the market has traded it straight away. It's the reason why dollar yen is here and not up around the 138s or 37s. Yen cross is a bit firmer, but to be perfectly honest, I'm not going to trade any of it because I really don't know what's going to happen on the Bank of Japan tomorrow, and what the market is going to do with it in the immediate. We can't forget that we are year end for the rest of the for most of the countries, and there is some hedging to do left, right, and center probably. I really don't want to take a side on the yen into year end. If they talk about stuff, of course, dollar yen is going to lose 2, 3, 4 big figures. Who knows? But base case is they don't change anything now, and then we are going to it's going to really heat up towards that policy review at the end of Kuroda's tenure, unless in the meantime inflation drops back. As we've seen some hints at peaks here and there. So yeah, it's really an open play, and I think the review will be done. That is I think that is baked in. The review will be done, but what are they going to change is the big question, and is it going to lead to abandoning YCC, widening the band? I would lean towards, if they change anything to widen the band, they will not just go, oh, all right, we stop buying JGBs and we abandon YCC, because that would be an absolute massacre in the markets. And they know that. But yeah, we can only get prepared for the event.
Yeah, I think it's important to note that it won't be, this review and the framework won't be a change to monetary policy per se, in terms of, you know, what they do on rates, YCC, anything like that. It's what the remit of the bank is. So just like the remit changed at the Fed to move to average inflation targeting, not that lasted long at all, given what we've seen, but it's just about maybe removing this quick as possible return to target with something a bit more flexible. It doesn't mean it's an actual monetary policy change. So you have to differentiate between the two when looking at it. And yes, it could be big news indeed for Japan that they're given a bit more flexibility, but in theory that's just giving them more rope potentially to keep easing, because they're not in such a rush to get there now. Anyway, that's what we need to take in this case. Is we'll be looking at 2023. I don't think the Bank of Japan are going to do anything. Certainly don't think they're going to do anything in monetary policy this meeting. I think it's a very low risk that we get anything that hints at changes next year. They'll probably just want to get this one out of the way, kick the can and worry about it next year. But small risk though it may be, it is still a risk. And if we do get something like that, that will be where we probably get the bigger price move overall. I am the same on trading the yen into year in. I've got a small short on, which I may fold after the BOJ, or at least into this week, just so I'm not holding anything over the holiday period and paying carry costs for that when I'm sitting at home with my feet up. So I may just fold that in and then look to reinstigate it as we get into the new year. So anyway, carrying on. Stell, you got anything you want to add to the Bank of Japan stuff? I don't ask you often about the Japanese stuff
because I'm not that into it. No, I don't understand the Japanese, so I tend to keep a distance. So, you know, for me, the bottom line is that the Bank of Japan is still way behind in terms of policy compared to the other major banks, and that's been weighing on the yen, obviously, over the past months. But for the more intricate things, I leave it to you guys. I really don't know.
No problem. Have you ever been to Japan, mate? Have you ever been?
Nope, I really want to, but I've never been. No.
Yeah, you should do. It's even a couple of weeks over there will give you an insight into how things work over there, how they think.
Okay. Yeah.
An amazing place as well. Amazing place. But anyway, we'll talk about traveling next year. We'll do some travel tips around the world. Over to the Bank of England, and there was a survey out, and the medium expectations is for the peak bank rate of 4.25%, and that's expected to peak in March 2023. So a little bit up as we saw last week after the Bank of England expectations for how high rates may go. Again, this is all stuff that we're going to be trading into next year as well. The floodgates were open on Friday. ECB BOJs coming out the woodwork like the worms that they are. ECB Centeno said it's hard to determine a terminal rate right now, but sees a very low probability of returning to 75 BP hikes in the future. ECB's not said Fed is closer to the end of rate hikes than the ECB, but doesn't expect the ECB to entirely close the interest rate gap with the Fed. ECB's De Guindos this morning said the ECB will hike interest rates further, and we do not know when it will stop. The rate will rise until inflation is returning to goal. And the ECB will assess QT in June and must be careful. So a bit of a can kick on the QT question. Simkus says no doubt there will be another 50 pip hike in February. And ECB's Casimir agrees the view of inflation developments requires ECB to continue with strong policy response. Rates will not only have to go to restricted territory, but stay there much longer, and strong action will be necessary at least in the first half of 2023. Now, another story out last week is that the ECB is now barring their governing council members from speculating in markets after the Fed scandal stuff. Apparently, ECB members were able to invest in individual stocks, bonds, and other assets, but now they've got to invest in more investment vehicles, if you like, and hold their trades for up to a year before they can get out of them. So they're following the trading stuff that happened with the Fed. And speaking of the Fed, floodgates are open there too. Williams says it's possible the Fed will hike more than the FOMC terminal rate forecast, so even higher. He says we're seeing good news on inflation data, but that real interest rates need to become restrictive and stay there. Daly was out as well. She said we feel a slowdown is coming, but we still have a long way to go because we're far away from the price stability goal. Her inflation projection has gone up. The labour market needs to be brought back into balance to bring inflation down. We'll need to get unemployment to the mid 4% or even higher. And she doesn't know why markets are so optimistic on inflation. The Fed will go on until the job is well and truly done on inflation. Therefore, she has a higher peak rate and sees it being held longer than some bond investors have predicted. Sees 11 months at the peak rate as a reasonable starting point, but the data will determine how long they stay at peak. Fed's Mester said she expects the Fed to raise by more than its median forecast. Says her rate forecast is a little higher than the median dots. Rate path is a little stronger than the median path in 2023. Once the rate hikes are done, Fed will need to maintain rates for an extended period. But the timing of rate cuts isn't tied to a calendar. it's tied to evidence of slow inflation, and will need to keep the Fed funds rate above 5% next year. So I guess we know where her dot is, one of those ones sitting well above 5%. In oil, sorry, not in oil, in the government funding stuff that we had last week, the can got kicked and Biden signed a 1-week government funding bill. That's to squeeze through the latest possible longer term deal this week. So there's still a bit of a risk that it might not happen, and then things will be shutting down over Christmas into the new year, and we'll see what happens there. But a 1-week government funding bill was signed on Friday, so that obviously goes out this Friday. And in oil, a senior US Energy Department official said the US is to purchase 3 million barrels of oil for the SPR for delivery in February. And contracts will be awarded to energy companies by January the 13th. So they've finally put their bids in the market, or they're going to get companies to submit to them for buying oil January 13th, and then they will go obviously direct to the firms. I'm wondering if perhaps that was the market buying the bid and bid, if you like, last week when we hit those lows down in the low 70s. The fact that it topped out on this news suggests that that might be the case, and that's what we were trading there. And now since we've had this news, it hasn't really done an awful lot. And that's it from the headline front. We did get a bit of data on Friday. We got from the US, we got the S&P Global, the old market PMIs, looking very weak as well. Manufacturing further into contraction, 46.2. Services plummeting, 44.4 versus 46.8 prior. So it was expected to rise, and it's gone even further into contraction. That's not good running into the end of the year. Services obviously include big holiday type stuff, and that's the period we're entering into now. So it's not looking too hot over there in the US as they end the year and go into 2023. Guys, you got anything you want to add to the pot?
No.
Nope.
No. Oh, actually, funny thing. Did you see Elon Musk's tweet about whether he should continue to be the leader of Twitter? I mean, I think he has too much time on his hands now. Anyway,
he was at the World Cup. He was at the World Cup.
He was, yeah, he was.
Yeah, he was there. So he must have been a bit. Few sheets to the wind, let's say it that way. Been on the old beers in his hotel room or private box or whatever he had. So
yeah,
he might end up with a bit of egg on his face over that one. But you've got to think he wouldn't put that out to the public, and unless there was something going on behind the scenes anyway, like he was going to step down and put in a CEO or something.
Yeah, he's weird in so many ways, but yeah. Anyway, okay.
Yeah, some would say genius, but others would say complete crank. Who knows? Okay, anything you want to add in?
No, the most I saw was like a load of opinion pieces, and once you start to read them, you lose your own line of thought. So I stopped reading them. The one thing I wanted to actually repeat is the mess that China seems to be in now that they relaxed their COVID rules. It seems like a lot of trouble over there, and also, I mean, just to name some truck drivers, I think they're only running on half staff, and then they just stay home because they're all ill. Yeah, the death toll, unfortunately, is seemingly on the rise as well. So they went from one extreme to the other. It looks quite a mess over there. I'm actually surprised, but that may be year end or whatever, or some market wondering why CNH is not weaker. But but I think it's just the market not wanting to engage in too many new positions for the year end. But yeah, it's a real mess over there, it seems. So I'm very cautious with the Chinese yuan, but for the rest, no, nothing really nothing really news-wise that would impact markets directly.
Yeah, I was looking at the one this morning because I thought we might see that come in and see that above 7, but it's really not having it, is it? And you've got to think, maybe is there a smoothing hand at work there? Because they must have known this was going to happen. There was going to be big floods of COVID cases.
Yeah, but I think it's rather a fact of the market not wanting to engage in too much new stuff. And on the other hand, we do have some how should I say, support here and there, and a bit of contradictory news as well. So I guess the market is just not wanting to engage in anything fresh right now. I think Yuan may be on the move once we get the year-end flows out of the way.
Yeah, I think so too. So that if the news keeps coming out of China is bad, I think I might join you on the long side here if we're still down at these levels coming into the new year. But as Kay says, it's going to be a real funky week this week.
Yeah, I mean, I can't. And now that we're talking about it, I can't repeat enough. People, be careful what you have in positions, because news is one thing, technical analysis is another thing, and you may be at levels, but some of those flows, and I've seen speculation about what may be happening over the turn. Which would be somewhere dollar positive, but then seasonals are the opposite. I heard or I saw some people needing to buy bonds and sell equities, but who will know? And be very careful, because we never know when some of those flows hit the market, those year-end hedges. So we can see very, very strange moves, and which may take currencies further than what they reasonably would. So be very careful from now on until year end, because it can get a bit violent out there if there's nothing standing in front of any flows, right? So just wanted to repeat that.
We've got we've got a bit of data out. The US has almost got a full data slate coming this week. But this week can be really funny. You can't, if you're trading data headlines and things like that, you've got to be careful, because sometimes it does, even some of the bigger numbers can take a real backseat amid the positioning into the year end and closing up for the holidays, that sort of thing. But we've got some consumer confidence numbers out the Eurozone this week, tomorrow, housing data in the US, the main conference board consumer confidence on Wednesday. Keep an eye as always on the inflation expectations there. Then on Thursday, not too much GDP. That's going to be the final number for Q3, I believe. So, that's rear view mirror stuff. Shouldn't be anything of note there. Obviously, the Bank of Japan tomorrow morning. Keep an eye on Japanese CPI as well on Thursday. That is one you're going to need to file away for the new year at least. But it could be a possible market mover if we've had something from them on tomorrow. So just keep an eye on that one there. And then that's the final Michigan consumer sentiment on Friday. New home sales, durable goods. That Thursday, Friday is probably going to be dead for markets. So it's not really going to matter what those numbers are. Everyone's going to be thinking about Christmas, closing up shop, finishing early, you name it, buggering off for the holidays. So it's not going to have that much of an impact on markets, I shouldn't think. But we should always be prepared for some outside moves where liquidity is much lower. Just to let you know, we'll be doing the flow show tomorrow as well, and then packing it in for the rest of the year from Wednesday. So wear your Christmas jumpers tomorrow, folks. We'll have the party poppers out. Let's have till then, let's have a quick look at what's going on in some of the markets. As we're looking at dollar yen, not doing an awful lot at the moment. Had a little mini gap lower as we came in, and that's pretty much closed for you gap lovers. But we are off from the highs we saw last week and looking a little bit sideways, likely to be the Bank of Japan impact there. So maybe we won't see any big moves coming there until we get over that hump. and then we'll see where we're left after that. Trading wise, we've still got this area down at the 135.5, which is always worth keeping an eye on. That's been a bit of an off on support and resistance area recently. So while there's nothing going on, that's the sort of levels you're going to be looking at if we find support. Small resistance area, 136.29 30s. That's might be where we're going to be ping-ponging between while there's nothing else going on. If we do get any big moves, you're going to be looking up towards these high 137s, 138s again. We've had several tries up in that area. Can't get through it, so that's going to be the more wider target or area stretch point, if you like, where if we get something, that's maybe where we move to. Downside, if we get into 134.5, that was the support that came in after we made that lows down to the 133s. Equally important, big level down in the low 133s, all those fibs parts around there. Aussie dollar is doing what it should be doing. It's maintaining this support area, this zone here. We've got down into the 75s, 80s. It's held, and we've bounced again after this pretty steep collapse from up high 68s. So this is where the support wants to be. We may be setting up for a potential break trade if we get under there. We've had a couple of goes at it, but too many knocks on the door, and we could see another move down to at least the low 66s, maybe even down to that low again there. On the top side, all the hard work is to be done again. We're finding resistance into this 67, 30, 40, 50 area that we found support coming in on the way down. If you get above there, then we're going to be looking at another old level, 67, 75, 80, that area before we move on to 68. Euro sterling had a nice rally last week. Now it seems the air's coming out the tire. If we manage to hold under this 87, 15, 17 area, which it's looking like we're going to be doing, then we're probably going to push back to this zone. If we break under this 86.5, 86.40 area, we're potentially going right back in the box again that we saw in the weeks before the ECB and Bank of England. So we really need to, for bulls like myself, I'm still long a bit. We want to see it hold, get above 87 and holding back above there, preferably above this 87.20 area. If we do, then maybe we'll get a run up to the 88s. Otherwise, coming into today, it is looking a bit weaker. So keep an eye on that one if you're long like us. Kay, do you want to have a little quick, very quick look around the grounds?
Yeah, I'm not. This euro sterling is. I think a lot has to do with already perhaps year-end flows and some. I don't know whether there are some payments to do for dividends and things, because if I recall well from my banking days, that was somewhere to do in December as well. But I first want to have a quick look going into year end, and now we've had the FOMC out of the way. I still think this is a wrong spike, so I used the lower ones as high. A bit of a triangle here on the really short ones. Keep an eye, I think, into this week on the 415-ish on the 2-year. We need to get back above 435, 440 to catch up on what may be terminal rates or so for the FOMC, but also for the end of year. Keep an eye on what's going on, because perhaps not too much in the short end, but especially on the 10s or so, there may be some decent bond hedging to do. So just seen here, we are around the top end of this little wedge channel, if you want. I don't think that seeing the latest yo-yo, we need to attach too much importance, but I would attach some importance to this 356, 358 zone on the 10s short term, and then here around 360, the prior high 363, 364. If that would start to go, perhaps the dollar can gain some traction again. Inversely, if year-end flows are for more bond buying, pushing yields lower, then we should keep an eye again on this 340, 342 zone. So that's for the yields, which are likely going to drive dollars if there's nothing else really to do in the markets. Those hedges, bond hedges, equity hedges, they could be real drivers of what the flows have to do, because for especially foreigners are involved. For every equity bond move, there is some effects attached to it. So the algos, if they are still plugged in, they may get interested. On the, where are we, by the way? Because I haven't even looked at it. With 38.67 on the S&P, we went down here to the support 38.30s. There's another one waiting here in the low 38s. That as well, if there's some more hedging to do, watch those levels, 38.30, 38, the figure on the S&P. If ever it starts to go back above 39, 39.10, then we could have another run, who knows, perhaps into the broken channel around the high 39s. Why not 4K? I'm not going to take any positions in there, because from tomorrow I'll be more off than on the desk, since the kids are over for our Christmas. Yeah, dollar yen. Going into the Bank of Japan. If we look at this, we see like those spikes coming back, spike coming back, spike coming back. I call it a yo-yo. For the short term, I'd say watch 135.55, 65. Top side, same thing, 136.45, 65. That should be your interim range, but allow for bigger moves, especially if Bank of Japan would do something. So the case for the night's Bank of Japan is really going to be, are they doing something or not? And if they don't do anything, I'd expect dollar yen to get a relief jump on it. But the bigger move, of course, and we've been talking about what they could do, and expectations that if the Bank of Japan would ever move, it would really create some waves in the global market as well. So if they move, then expect like really this could really tank, right? And I'm saying the prior lows, but if they really would move something, I wouldn't even imagine to see low 130s before the wave is really over. So pay attention to what's happening on the BOJ. On the cable, we're seeing some resistance on Friday after the dump, after Bank of England and FOMC. We couldn't go above 122.25. I think there's some there is some, call it month or year end, whatever activity. It looked a bit like that going into the hours this morning. But anyway, I'm keeping an eye on this zone here around 122.40 to 50. Yeah, it looks like we might at least see an attempt to go back to mid 121s. That's what I would think from here. The bigger zone is 120.90 figure, right? It's 90.10. If that would give way, then perhaps there's some more to do in sterling or the dollar side of it. If the dollar catches a bit, who knows? But anyway, I think we may find some resistance on rallies in sterling, but really when I'm trading it, I'm really keeping it very small. This one I'm a little more constructive on the euro sterling, but as Ryan said, we hit this high where it was Friday morning, was it?
Yeah.
Yeah, Friday morning, right here on the resistance on the 78.6, and then we did like already 70-80 points back lower. I think some people must have been taking profit. That's for one. But to remain constructive, I'd say it would ideally we hold this zone already around 86, 85, but I'd allow on any, because I've seen, as I said, some activity around the hourly fixes this morning. It looked like rather buyers of sterling early morning, but I'd allow for 86.5. That's what I'm gonna do at least. For the position, I'm not sizable in it, so we'll see what happens there. But I am a bit constructive on this after BOE, ECB, especially BOE as well, having been dovish on the statement, and Bailey still being dovish. So I think once the flows are out, we might see this just gravitate a little bit higher. Another one that I'm looking at, and because I've had the idea that, and also oils are a bit lower, that Norwegian kroner may be a little bit on the defensive towards the year end. So that's a bit of a. I've been playing it several times already. Took profits at the end of the last week. Re-entered just smalls here. I think for as long as 1040s hold. I think for towards the year end, yeah, if 1040 is holding would be ideal. I think we can have a move back a little bit higher. Why not retest those highs? Dollar Noki, idem dito. We had a very good hold around 970 the other day. That's really the levels that we were looking at. I did take most of it off because I was off as well and not being sure. But I'm buying little dips here. First monitoring area is around 978 for now, but the big one is still around 970 for the dollar Noki. And I wouldn't be surprised if we have a little push higher towards the year end in this one, especially from the Norwegian side. Okay, now Michael, hi Cayman, if the BOJ move, how much do you think they will move? 10 BPs to a zero rate or more, in your opinion? Well, the base could be back to the zero, but the more intense watching, Michael, is going to be because they won't do much about yields. Really, I don't think they will do much about yields right now. What they would rather do now is give hints at they might buy a little bit less of REITs, buy a little bit less of the ETFs, and hint at some widening of the band, which, in my opinion, we should not expect much more than going from 25 BPs around the zero level to 50 BPs around the zero level. For now, Bank of Japan has not and is not inclined to widen things much more because it is just not in their mindset right now. And we have also seen that if they would let it really go, it would create a bit of a disaster as well in the JGB market. So there is absolutely, in my mind, no way that they are going to let things just float. Okay. And Charles, where are you? Yeah, there's a few questions there. Last week, central banks, which currencies and or currency pairs are you most bullish or bearish on for Q1 2023? Yeah, Ryan, we can perhaps have a little look at that tomorrow to see if we can find something. Right here and now, I think the situation is a bit cloudy. My crystal ball is a bit cloudy right now, but yeah,
Mine's a snow globe.
there should be a few movers and shakers to start the year next year. I can have a look at those. Yeah, and we can have a look at those tomorrow. Listen, Ryan, for now, I'm really going to call it here because this the rest we're still uncertain about this this euro mix is still up and down and in the middle. And I know some people are looking at starting to get short again in there. And I'm inclined to let the year end go and then have a look at it. But it is a fact that we've stopped up there, and it's a good area. And yeah, I might be looking at it as well. And that's it for me, mate. Unless Stel wants me to show something.
No, I'm all good.
Yeah.
Cool stuff. Yeah, just going back to Charles's question about 2023. Yeah, I think tomorrow we'll take a bit more of a look at some of the expectations going into the new year, see where we are, just run over a few of the fundamentals that have happened. You know, we're always watching the fundamentals day to day. We need to put those into context of what that means moving forward. So, yeah, tomorrow's show, as it will be the last one before the new year, we'll do some setting up for 2023 for you, and yeah, we can look at stuff there. But Constantine's also asking, can we look up the copper chart, please? Of course we can. There's a copper chart, and what do you want us to do with it, mate?
You want to?
There's a copper chart there. Let us know what you want to look at in regards to the copper chart. You say any fundamental drivers to be aware of?
China.
China is one. Obviously, what happens over there with COVID, and if there's mass shutdowns again, that's going to impact stuff. Commodities are going to be on the back foot with that. But also, you know, keep an eye on these PMIs and these manufacturing numbers. You know, as we pointed out earlier in the show, still dropping in America. You know, and we're seeing a bit of a divergence in other places like Japan. We saw the PMIs coming out, manufacturing lower, services higher. So on a manufacturing basis, things aren't looking all that great. And I think one of the things 2023 will always kick off with is, what does the global picture look like going into the new year? And if it's everyone talking recessions, you know, sliding, dropping economic activity, that sort of thing, that's not going to be good for commodities, be it copper or any of them. So yeah, that's the sort of fundamentals we're going to be looking at. But as I said, we can get into that tomorrow as well for a bit of a final show before Christmas. Unless you guys got anything else to get into, I think we'll call that a day for today. Still, you got anything you want
I'm
to throw
about to get into my lunch, so we're all good. I think it's going to be a quiet.
We'll talk about Stelos' lunch as well.
It's going to be a quiet few days going into, or it should be going into the new year, Christmas, New Year, and yeah, it's been an eventful year. We'll talk about it tomorrow. It's been a year that we were kind of hoping for, right? Volatility that we saw. So
yeah,
so we're happy. We're happy.
Yeah, and let's hope it happens next year as well.
Yep.
Okay, we should call that a day. Thank you very much, boys and girls, for coming to the Flow Show as always and giving us your continued support. And obviously, thanks to my colleagues Kate and Stel. Have a good day. Have a great week. We'll see you all tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.